Good evening, ladies and gentlemen. This is Barry Norman, and welcome to Bollinger Bands for Binary Options. Tonight's class is broken into three segments. First, we're going to talk about what Bollinger Bands are, the development of Bollinger Bands, and how you build a Bollinger Band. From there, we're going to go look at how you apply Bollinger Bands for binary options to charts and to make trades. And then we're going to lastly go into the live markets and take a look at what's trading out there and see if anything's giving us a signal to use with Bollinger Bands this evening. So there's a lot to cover, so we're going to get ready to go. If you have any questions during the class, please feel free to write them into the screen, and I'll be more than glad to answer your questions. Now, Bollinger Bands are a great way to trade binary options. Now, if you're a new trader or even an existing trader, there's lots of strategies in the markets, and there's lots of what's called technical indicators. These are indicators that are used with charts or numeric calculations or mathematical calculations that give you a result. But getting the result or putting something on a chart, that is the easiest part of it all. It is after that that you have to then use the strategy. Okay. And anybody can read a strategy. It's understanding it and deciphering it. Now, under Bollinger Bands were developed in the 1980s by John Bollinger, and they were developed before the Forex markets. They were really developed for day trading in the commodities markets, and they are a process or a series of moving averages. Now, you can take all kinds of moving average strategies. You can take a 5 and a 10-day moving average or a 5 and a 50-day. There's all kinds of things out there about moving averages. But John Bollinger developed a charting system that would combine two specific Bollinger Bands and the way that they're or two specific moving averages and the way they're calculated to put them on a chart, and then develop the way for reading these movements on the chart. So the hard part comes in the interpretation. Okay, this can be learned easily, but put into practice, it's not so easy to recognize. It's easy to see it. You have to understand it and learn it. Now, you'll see all these people out there teaching you or telling you about Bollinger Bands. But the fact is, most of them are talking about specific strategies that have been applied and interpretations that fit the Forex market or that fit the commodities market or fit the stock market. But very few of them actually have built a strategy that applies to the binary options market. Because you got to remember, in binary options, you are simply looking for an entry point into the markets that telling you that the market has enough momentum to carry it forward in the direction it's going for a period of time so you can get a trade in. You don't need to know how far up or down it's going to go. You don't need to know when you're going to want to exit the market. You don't need to know how many pips it's going to go. All you need is to be able to interpret from the Bollinger Band an entry into the markets that has momentum. Okay. So remember, when you're trading binary options, you're first going to decide which asset, and I'll show you how Bollinger Bands can help you pick that asset, how you can track many assets at what time. Okay. We also have to learn how to read the Bollinger Band, so it's telling you which direction to trade that asset, and in which direction or when this will occur. Now, there are many types or ways of applying or calculating moving averages. There's what's called standard deviation, there's exponential moving averages, and there's weighted moving averages. What these moving averages do is for those of you who don't understand what a moving average is or don't know what they are, a moving average is an indicator used frequently by technical analysis that shows the average value of a security's price over a set period of time. It's just an average. So if a stock was trading or an asset was trading at 10 and was 10, 10, 10 for the last 5 days, you take the 10, 10, 10, add it together, you get 50, divide it by 5, and the average for that would have been 10. and you put a dot on the chart today at 10. That's your moving average. Tomorrow, if it's 10, 10, 10, and now it's got up to 12, you add 10, 10, 10, and 12 together, and you get 52, and you divide that by 5, and what do you get is you get 10 point something something, and that's today's moving average. Okay. And you can do this in all different types of frames and numbers. You could take a 5-day moving average, a 12-day moving average, and that's not the moving average over 2 days. It's the moving average of how many days you're adding together and then dividing by. Okay. Now, we always talk about moving averages in days. Okay. But when we talk about a 5 and a 15, you can talk about this, or you can be applying this in time frames. So in other words, if you're looking at a 30-minute time frame, you can be looking at a 15-day moving average in a 30-minute time frame, and it can calculate you can go from the close of the 15-minute time frame all the way through for every 15 minutes for the next 5 hours and divide that all back down. You're just picking either a day or a specific time frame. Now what exponential moving averages do is they apply more weight to the more recent data. Again, if we're looking at a moving average that was 10, 10, 10, and 10 over 5 days and dividing it by 5, you get 10. If we take the 10, 10, 10, 10, 12 divided by 5, we then get 52 divided by 5, and we get 10.4. Okay, but because the asset moved from 10 to 12, that current price of 12 is more important than the 5-day-old price of 10. So what happens is we may give, in an exponential weighting moving average, we may give a percentage higher value to that current time and a lower value to the back-end time. And it sounds complicated. And back when I started trading 40 years ago, you had to do this mostly by hand. It was slide rules. Today, it's all done by computers. Okay. Now, a Bollinger Band, or what John Bollinger developed, is a system using, he actually uses 3 bands. For binary options, we exclude the center band. And he uses Bollinger Bands consists of a 2 and a 20-day moving average. And what this does is when you take the same price, the same asset, and put it and calculate that and put it on a chart with the 2-day moving average, it will form a line on the chart. Okay. Then when you take those same numbers and apply it there with a 20-day moving average, which means a 2-day means you're moving yesterday and today's, calculate, adding those together, dividing by 2 and putting that dot on the chart. The 20-day means you're going back today plus 19 days and putting that on the chart, and that will give you a slightly different number. Okay. Well, when you do that, you end up with 2 lines. You end up with an upper line and a lower line, okay. Just like you see in this chart. Okay. When you put these lines on a chart, this band that you're seeing is only a simple coloring of the field between the upper and lower bands, or the 2 and the 20 moving average came from the Bollinger Bands calculations. Now, all of this sounds complicated. Sounds very hard to do. Okay, it isn't. You know why? Most charting systems, because Bollinger Bands is so popular and so well known, and it's standardized because it's not it's not putting it on the chart, it's reading the chart and then interpreting it, that is personalized. That almost all charting services offer Bollinger Bands predetermined, and all you do is click on Bollinger Bands and it drops it on a chart. And I'm going to take you into two different charts and show you this right now in the live markets. So hold on, I'm going to pull up let me pull up some streaming charts here. Give me 1 second. I'm waiting for this to come up. I'm going to freeze this frame for you there a second. And just hold on 1 second. I need to. Okay, I'm going to freeze you there for a second while I go fix something in the background. Okay, there we go. Now, what we're looking at, I'm going to give it a second for it to pop up on your screen. This is the charts from FX Empire. They are free. You can go to www.fxempire.com, and this is their real-time charts. They also have live Java charts, and I'm going to show you how to do this on both charts. But I have found this charting service. It is free. There's no logins. There's no anything. Just go to www.fxempire. Actually, here, I'll give you the link. I'll send it to all of you right now. Okay. When you go to this charting service, it just gives you a very nice, easy to see, clear-cut Bollinger Band chart. First what we did was, for binary options, we try to stay in a 15, 30, or 60-minute time frame. Okay. 30 minutes is always preferable because your Bollinger Bands is going to give you a short-term trade. It's not going to give you long-term trades. Okay. So you want to stay in a 15, 30, or 60-minute time frame. For the strategy I'm going to teach you tonight, after we go over how to apply these, the 30-minute is the best. But in this case, I'm just showing you how to set it up on a chart. Right now we have the USD Canadian dollar on the chart because this is where I left the charts. Okay. We do a 30-minute time frame. We want to set the price on the close of that time frame. And we just want to put on there, on the price band, we drop in Bollinger Bands. We don't want to see any moving averages. And we click on the chart. And now what do we have is we have a Bollinger Band already to put on the chart for us and develop for us. We see the upper band at 20. We see the lower band at 2. And what we see in the dark blue is the price movement moving through the chart. If we're going to use live Java charts, it's the same thing. Now, here we've used, because each charting service has different graphics, and you have to find one that you like. But again, in this chart, we use, for the clarity for you guys to see it out there, I've used an area chart. So my chart type is an area. Okay. My time scale is 15 minutes. And I simply go here and drop on the Bollinger Bands. Now, if I wanted to be more precise or make it easier to work with, I could go down here to Systems Manager, and you can see under Bollinger Bands, it's already set at 2 and 20. Okay. We can get rid of the middle band because we don't need the middle band for binary options, so we can set that at 0. And then we can go down here and we can also change the upper band to an area and the lower band to an area. And now we've got an easy to read, nice, clear Bollinger Band chart. Okay. This is the band above, and this is the band below, and the very, very, very vivid price is the current price of the asset. But this is how you simply drop them on this chart. We're not going in to read these charts yet, okay? But tonight we're going to spend a lot of time looking at the US dollar, Canadian dollar. But this is how you put them on a chart. So I'm going to take you back to the PowerPoint, and we're going to go over on the next steps of what we have to do or how we understand and read these. Okay. Because the technical part of actually understanding what the 2 and the 20 is and putting it on a chart now are very easy because they're done automatically for you. Okay. So you don't have to actually draw them on a chart. Now that you know how easy it is to put these on a chart, you have to remember you have 3 decisions you can always make. You can be placing a call or say the asset's going up. You can be putting a put or the asset's going down. And of course, it can give you no trade. That's also a decision, and it's also a signal that it can be giving you. Now, Bollinger Bands are easy to apply. They're very, very easy for a trader, whether you're a beginning trader or an advanced trader. Once you have the chart set up, okay, you have to read the signal. Now, if you go read in the internet or you go buy a book or download some things or watch a video on Bollinger Band, they're going to go into all of these complex things about the range and the price movement and the breakouts and the break-ins and the tops. And none of that makes a difference to us in binary options. Because remember, we are preset in determining, we have no control once we've selected the asset. We have no control once we've selected the expiry, and we have no, the only thing we have to do is pick the asset, then we're locked in. We have to decide whether it's going to go up or down, and we have to figure out what price we're going to lock in the market and what expiry. Once we've made those decisions, we don't need anything else from Bollinger Band. We don't need to know where to put the stop loss. We don't need to know where to put the take profit point. We don't need to know when to get out of the markets or it's turning against us. All we need to know is when to enter. And so reading the signals for Bollinger Bands and binary options become very easy, and this becomes a great system to use, a great strategy to use, and very easy to apply. So whether you're a beginning strategist or an experienced trader, it is very simple. What we're looking for in this Bollinger Band channel, once we have the band on here, we're going to start looking at price. Now, granted, we're going to be looking at prices on charts now after the action has happened. We're going to go into live markets after this, and I'm going to show you how to predict ahead of time so that you are there when it does happen to give you the signal. But the thing that we're looking for with Bollinger Bands is we're looking for what we call a gentle, and the word gentle is very, very important, a gentle convergence and then a divergence. What this means is we're looking for, I'm just getting a highlighter up here. We're looking for this price band, this dark blue price band, to gently lay on the lower price band of the moving average. So you have the light blue band. You're looking for the dark blue or the current price to lay on it, not to break through it. You don't want something that's erratic and volatile. You want it to lay on that lower band, or it can be laying on the upper band. If it's laying on the upper band and breaks out going up, that's a buy signal. If it's laying on the lower band and going down, it's a sell signal. Okay. Now, when it converges on there, you want it to gently lay over the price. Like right here, that is not gentle. Right here is not gentle. Okay. These are all breakthroughs. We're looking for the price to converge onto the lower band and simply break out gently from that lower band and then continue to diverge. When we can see that it's diverged for about 15 minutes, we now have a clear signal that that asset, you can trade that asset in the direction of the divergence, and that it will have enough momentum to carry you. Now this is very, very important. It's not strong. It doesn't tell you how strong it is for how long of a period of time. So if you can't get an expiry in the next 15 minutes to 30 minutes, you do not want to make this trade, because it's only saying this asset at this time has the momentum to carry it forward for enough time to enter a trade. But if you go to the Option Rally website and it doesn't offer an expiry, say the next expiry isn't until 2 hours from now, do not make that trade. This is giving you short-term, enter the market now trades. Okay. So what let me flip us over to our next chart here. So there are many, many places you can get free charts. Like I said, tonight we went to the FX Empire chart, and there are many places we can go to get these. And you can use whatever charting service you're using is going to offer Bollinger Bands. Now, again, we have to remember, for binary options, best to use 15 or 30-minute, no more than 60-minute time frames. Okay, it's best to use medium price and set it for Bollinger Bands. Bollinger Bands is preset for 2 and 20. Okay, and then what we're looking for is a gentle convergence and the divergence. So this is a chart from May the 7th of cotton. Okay, this is a beautiful trade. Okay, you see here where the arrow is pointing at 1. We see that the price gently lays on the upper price, on the upper band. It does not radically break through there. It's not a violent breakthrough. It moves up, moves on it, and then diverges. Okay, this trade went on for almost a half a day. Okay, once you get that divergence, and you can see the white area between the price line and the channel, it's giving you a clear signal that you can enter that market in that direction. So you could have traded cotton going up on May the 2nd, well, this is a May 7th chart, but this is back on May the 2nd, and you would have been fine and in the money most of the day. Now if we go to May the 7th, okay, this is the same, but it's a bit more erratic. This was not a very pretty sight, but if you notice here, the price laid on there, and when we're looking at this chart, you have to remember this is a half hour at least of time that it laid on there, and then it broke out and continued down for at least a good part of the day. So this was a clear-cut signal that you could have made profit. Okay, what you're looking for is something that is gentle. So again here, this is not gentle. Here we can see this is on Euro US dollar on May the 7th. The dollar violently pushed down the euro. It broke right through. Okay, even though it laid on it, it didn't really lay on it. It actually pushed right through there. It came out, and also only came out for a very short period of time, and it was erratic and it was hard, and it is not. So this is not. It gave you a convergence and a divergence, but this was not gentle. It can easily fool you if you try to push it too hard. The best thing about Bollinger Bands is that you can practice them over and over again, watch the charts and get to know the movement of an asset, and you can get to see these things ahead of time. And the thing is, you can watch many assets at one time. And you don't have to sit back there glued to the charts. Okay. Now, what we want to do is we want to pre-set up our charts with the bands up above and below. Okay, and then we want to then start going through the assets and look at them. Now, these are samples that I'm popping up here of Bollinger Bands, and they're funny because these bands take all kinds of shapes and figures. But again, these are not good trades. These are ones that broke out, and you see the divergence, but they were not, and you probably would have made profit trading them, but they are not clear-cut signals. And when you trade, you want to find the best trades possible. So you don't want to just jump at these. If you're using 5 different systems, you'll get more than enough trades. So if you're using Bollinger Bands, only when Bollinger Bands gives you that beautiful, perfect signal do you make the trade. Okay. Now, this is a beautiful trade. This is the Japanese yen on May the 9th, and you can see where it's a little bit hard for you to see out there, but you see where the price laid on top of this at this 99.5, and laid on, you can hardly see the blue line underneath here, but then it diverged out and went all the way up here to 100, and it went up the entire, it went up here a good couple hours and never came back down. Okay. Now, what we're looking at here is a very gentle convergence. You see where the price below the square lays on the upper band, breaks out, and then comes out, and it stayed out here from about 6 a.m. all the way to 8 a.m. So you could have watched it, made sure the divergence was happening, you saw the gentle convergence, and you could have made a trade. Okay. Now, granted, you need to see this ahead of time. We're looking at this after the fact. It's very easy to look at things after the fact. But first you have to know what you're looking for before you can see them trading live. Okay. Now, what we want to do is we want to set up our charts and get ready to start looking for these in the market, so we're watching them ahead of time. Now, this is another example. This is crude oil on July the 25th. Okay. We made profit, but this was not pretty, and it didn't have a convergence. The price just broke right through. And even though you have this divergence, it was not a clear-cut signal to trade. Okay. So let me take you over, and we're going to go into the live markets right now, and I'm going to take you some charts I have pre-set up for us that are actually live charts today. And we're going to go take a look at where things are trading right now. So I'm going to take you back over to the FX Empire chart. And the first thing we're going to look at, and I'm going to show you what to look for, is once you set up your charts, I'm sorry. Once you set up your charts, what you want to do is you want to have them ready, and you can start dropping through assets. Okay. Now, developing a Bollinger Band isn't a fast thing. It's not something that rapidly happens. Okay. It's a thing that develops over time, the signal trade. So when you have your chart set up, you can go through here, and all you simply do is look at many, many assets, and anything that gives you a close to a signal, what you're looking for is an asset, the price band, is getting close to the upper or the lower band. Okay. When you see it approaching the upper or lower band and getting very close, you can tell yourself to start monitoring that asset. So very quickly, you can go through the assets and look for those that are giving you a signal, and they're not going to give you, you want to watch the signal develop. Okay. You don't want to see it already happen. You want to go through the assets and say, oh, look at this one. It's getting near the upper or lower band. I'm going to sit back and watch this. And all you do is leave that chart set up on your computer screen, go off and do other things and keep coming back to it and wait for it, because you still have to wait for it to lay on the upper band. When you see it laying on the upper band, then you're going to start watching it closer. Or if you see it laying on the lower band, when it starts its convergence, you will see it. And then you start watching. Now, a lot of times, it'll go right back into the center. But when it lays on the upper or lower band and converges, then you know you want to start watching for that gentle overlay, and then you want to watch for the divergence. So you have a half hour, 45 minutes. You can go off and cook dinner and come back. You just want to set these up and set up your potential. So what I've done tonight is I went through all the assets very, very quickly before class, and there were two assets that are showing very good potential, and that was the U.S. dollar against the Canadian dollar. And see what I'm saying? Right now, the Canadian dollar is laying right on the upper price band. It just touched it. It hasn't started to converge yet. But this is we want to start watching very closely. If we're using the live streaming charts, I also have the Canadian dollar set up there. And this gives you a different depiction. It's pretty much the same. But you see here the Canadian dollar has actually, it did diverge out and then fell right back in. Okay. But it's still really near that price band, so we want to watch it to see if it's going to come back around and lay on that price band and make that trade possible. Okay. And you have to, if you use the FX Empire charts that I was just showing you, this whole strategy holds 100% true. If you're using a different charting service, the strategy will hold true, but you have to learn to put it properly on your charts and interpret it. Okay. Because each chart, depending on how big it is on your screen, how small it is, what color it is, how broad the lines are, how you have it set up, okay, has slight variations. Okay. So here we're looking at a 15-minute time frame, but this one doesn't give you the choice of selecting whether it is on the close, the medium price, or the opening price. So it's predetermined. So it's going to be slightly different than the other FX Empire chart where we're set on the medium price. But there are two that we wanted. Well, there was one that I had set up for you a little bit earlier tonight that we wanted to watch, and it has moved forward now. And you can take a look. What happened was when I started setting these up way before class, natural gas was laying on the lower price band. It actually did break out, and it's continued down over the last, let's see, the last almost an hour now. So when it diverged here, when it converged here and then diverged out, we could have entered a trade going down, and we would have made, so we would have entered the trade at 410. We would have been in profit an hour later. So as long as we would have gotten that trade, because it gave us the convergence and then the divergence. Okay, so this is what I was saying is before class, back an hour ago, I was setting or 2 hours ago, I was setting these up, and this was just up here at the convergence, and I let this set up on the screen so that we could look at it tonight to see which way it was moving, and this one has actually moved and made the So now what we want to do is we want to keep our eye on this Canadian dollar and see where it's going to go. These are the only two assets I was able to find tonight, and we can go back to them again. So we'll start out with the euro, and you can set up your own system of which ones you watch. But we start out with the euro US dollar. Again, we can see that trading definitely in the center, so it's not worth watching any farther this evening. The pound we can look at real quickly. The pound is trading. You can see the price is directly in the center. Okay. And you can come back throughout the day or the evening and do these all over again. We can see the euro GBP, the euro against the pound. And I just watched the majors. We can do the Japanese yen. Let's see where the Japanese yen is at the moment. Japanese yen is towards the bottom. You can see now earlier today it had a very big divergence. It was a very harsh divergence and convergence and divergence, but it wasn't a signal to trade. Now it's trading the bottom quarter of the price variation, but also you have to know is this time of evening, as the U.S. markets have already had their data for the day and they're winding down and trading is fairly low, the volume's tapering up, that you're not going to see that much action. So the markets will, so you'll have to sit longer. During the day when the market's very busy, it's more likely these will develop faster. Late in the evening, they will develop slower. So let's take a look at the Euro JPY, see what that's doing for us right now. Okay, it's also very much in the middle. Okay, and then we can go take, let's look at the Australian dollar. Guys, if you have any questions, feel free to type them into the screen. The Australian dollar is dead center. You can see the price is trading dead in the center. And then let's take a look at the New Zealand dollar. Now, the New Zealand dollar might be worth watching because look at that. It's really had a fairly, it was not a pretty convergence, but I want to watch it as it develops. It seems to be very much on that bottom price range right here. It seems to diverge out, but at this point it may just move forward and then give us a clear-cut convergence and a divergence. But you see it's all the way down near the price band, so we want to start watching it closer. Okay, and that's all it's telling you is this is maybe giving you a signal to trade. Like I said, it may turn in and go straight in. It may be violent and start being erratic. It hasn't said, yes, I'm a true signal to trade. What it's saying is this is the point as a trader, you want to sit back and start watching this asset. And all you have to do is keep this on the screen. You can go back every 5 or 10 minutes and watch this as it develops. When you get up in the morning before you go, shave and shower for the day, you can pull these up on your screen, go shave and shower, and come back and check them, and just see which ones are, are ready to go. Or, you're packing the kids up to get them off of school. You can keep running back to the screen. Okay, and see where they're trading. Once you start seeing it develop, and you'll watch it, and you'll see it develop along the way. I want to take us back over to the Canadian dollar, so we can see if it's actually developing into something. Okay, the Canadian dollar looks like it's going to do something very, very nice for us tonight. I mean, it looks like, because the price is not moving erratic, and that means we probably will have a gentle lay on. So this is the asset that you should be watching this evening. Would it help at this stage to change to a 15-minute chart? Okay. No, you don't want to jump around from different types of charts. What you want to do is this is based on a 30-minute chart, and it's based on this look. If you start out with 15 minutes, like I said, on each different type of chart is going to give you a different look and a different move, okay? And then you're forcing a signal, okay? You can make things work the way you want them by changing charts, because the change of the charts will change the way the asset looks on that chart, okay? At this point, if we were to, let's see if we can change this to 15, yes. If we just change this to a 15-minute chart, look what happens here, okay? It's a completely different look. Okay. Now, the thing is, if you are using only 15-minute charts, if that's the charting system you're using, you will then learn how to read this chart and apply that strategy to this chart as the signals. Now, we can see here, it's going to give, it's pretty much the Canadian dollar still trading near that top band. We're still looking for it to converge on there. Okay. But you see, it gives you a totally different view, and what it is just as a person, an individual, you want to trade. So you're going to force yourself, if you jump between chart and chart and chart, or chart service and chart, when you see something develop, you're going to force yourself to back into a trade. Okay. Don't make the trade happen. Wait for the trade to offer itself up and say, here I am, a trade. Okay, I hope that answered your question, Stan. Okay, so we see the Canadian dollar here. Now, if you know, like I said, if you want to do this and you've practiced this, and you've got to practice it, okay, I'm giving you the basic rules. You've got to practice it. If you decide you're going to use a 15-minute chart, you want to use that all along. If you decide you're going to use an hour chart, or the service you're using only offers 15-minute, or some services don't offer 30-minute charts. So you have to develop. I'm giving you the general strategy. You still need to look for the convergence and the divergence. You still apply the Bollinger Band the same. But once you start with yours, you as the trader need to practice this. But you can practice this by going back overwards and develop your own eye to see when this convergence and this divergence are this nice, gentle flow. Okay. You need to be able to see this yourself. Okay. So right now, we're still tracking natural gas. Natural gas, let's update this chart here a little bit. Let's see if I can get this. Okay, see, we're setting this up for natural gas. We're changing it to close. We're changing it to close. We're changing it to Bollinger Bands. We're getting rid of the moving averages that are on there. Okay, and even updated, and this is now within the last minute or two, we can see that this was a very nice signal, and it's staying out and down, and you could have entered this trade at any point and made profit. Okay, we can go back over to the Canadian dollar. Let's update this chart. Unfortunately, when I'm doing these on the computer or with the GoToMeeting, the refresh rate isn't fast enough, so I have to keep forcing the charts to refresh for you guys. Okay, so we want to get a USD Canadian dollar. Now, there is a very good, if none of you have charting services and you don't want to buy them or pay for them, there's an app from Google called Trading View that you can download. It's free, and they have great charts, and they have a very easy setup. Bollinger Bands drops right on there, but it asks you right away what color do you want the band, what color do you want the inside, the out, and you can color coordinate it all to yourself. Now, we can see that this chart, now that we've updated, is mimicking the live streaming 15-minute chart exactly the same. You see this a little bit more broad here in the Java chart, okay, which is a live streaming chart. So we can see this exactly accurate here. We can go over back here to and we can see here it's a little, this chart's just a little bit smaller, but we can see the Bollinger Band has dropped back into the channel, but it still remains fairly close to the upper band. So we want to continue watching this. We don't want to go away. I'm sorry, Loretta, I don't have the link for that app. Just go over to Google, look for Trading View. Okay. I'll see if I can get it for you, and I'll email it to the people in class. I just don't have it available. Okay, so basically this is what we want to do. And now once we have the band set up, we have the chart set up, we have understand the interpretation, we just have to sit back and watch and wait. And that's what this is all about, is watching and waiting. I'm going to take you back over, and we're going to run through the commodities and see if we can see anything, because you have to wait for the trade to present itself. Like I said, if you would have seen natural gas earlier today, or like when I started setting this up for class, you would have seen it presenting itself, and then you could have sat back and watched, and you would have seen all of this develop. Okay, and you would have given you the clear-cut signal to go in the market. So let's take a look at gold real fast, see if gold is, you tend to get these bands very often in commodities. Okay, we can see gold is trading right in the center, so it's offering nothing. We can do crude oil. Okay, now you can see earlier today, crude oil broke out and gave you a sell signal, but it was not a Bollinger Band sell signal. Okay, you can see there was no convergence. The price broke right through, okay, and came straight falling down. That isn't it would have been a good trade. You would have made profit, but it isn't a signal. It's just a guess. You need that convergence. Now, I'm going to bring this up on the other charts because maybe in the live streaming charts we can see it a little bit better. I got to go over to the commodities. I'm going to set this up on commodities and see if we can. You can watch me set up the whole thing now because I have to go over the commodity chart. So let's pull up crude oil today. Okay, so we have crude oil. It really tumbled today. It's 91.87. It touched all the way down here at 91.20. So what we want to do is we can put this on a 15-minute time scale. Okay, we have crude oil. We're going to go apply studies, and that means we're going to apply Bollinger Bands. So now let's put the three bands on. The center band is the moving average of the price, which we don't need here at all. Then we have the upper band and the lower band, which is a 2 into 20 band. So now we're going to go make those studies work exactly how we want. So we're going to go here, we're going to click on the systems, we're going to click on the manager, we're going to get rid of this middle band by putting it at 0. We're going to come down here and we're going to change the line to an area, and we're going to change the bottom line to, okay. And now what we have is, yes. So this is today's crude oil chart, and we can see here the price broke out, but it never actually converged. It broke through here and went back in. It stayed above, and see, it didn't lay on there. It just jumped up, came in, jumped out, came in, and it fell down. Now, this here is a movement for about 10 minutes. And what I'm saying is, if it doesn't have a 15-minute convergence and a nice convergence, it's not necessarily a signal. This could have been interpreted easily as a signal if you were watching it, okay, and you would have made profit. Okay, I just like my signals to be more closer to 100%, because just as many of these as you'll get right as you'll get wrong. If it gives you that clear, beautiful laydown on the charts and then gives you the clear convergence and then the divergence, you know you're going to make money. Okay. If it gives you something like this, you're probably going to make profit. But instead of going from a 90% signal, you're going down to an 80% signal. But you could have traded for profit today. Okay. So this is crude oil, and that's, hold on a minute, I'm going to get rid of my markers here. And if we look at this in a 60-minute time scale, okay, again, we have a completely different view of it. And there we're seeing it actually just broke right through, although it did break and stay out. Okay, so this is what we're looking at in this time scale. This is the original breakout. This is where it went back in, and then this is where it came back out later. Okay. So it's it's still the same information, but it's a very different perception of what is happening. Okay, so let's go back over one more time, and we're going to take one more closer look at natural gas and see if it's still holding out there. Okay, see, natural gas is still out there and a clear-cut signal. And then we have Let's go back over and look at the Canadian dollar. And we still, let me just update this for us here. Okay, the Canadian dollar is still hanging in there, very, very close to that upper band. So I would keep a very close eye on the Canadian dollar. And those are the two, well, the natural gas is all over and done with. But if I was you, I would sit back, if you have time this evening, and keep an eye on that Canadian dollar, and you might get your first Bollinger Band trade in, or you might be able to observe it and just trade it on paper to see your first successful trade at it, and go through the charts every couple hours, go through them tomorrow morning, and just don't trade them. Don't trade them on paper. Don't waste your money. Trade them on paper until you have it down pat. Once you have it down pat, you will see them and you'll feel them. You'll know that they are clear-cut signals to enter the market. And on that note, I'm going to say goodnight to everybody, and thank you very much for joining us. And hopefully I'll get emails from everybody telling me how great the Canadian dollar was and how much you traded, or let me know in the future when you traded the Bollinger Bands and you've been successful at it. And I wish you all the best.